Good afternoon. Welcome to OptionsTender. It's Wednesday, October 8th, 2025. We're going to look at the dollar in comparison to the SPX. That's going to be really kind of our highlight today because that does catch turns. And so we'll also go through SPX on our usual path, but quickly. And I waited to see if we would get new all-time highs to see what those indicators look like at this point. So that's kind of the whole point of us checking this every single day, especially in the 65 minutes, so you can kind of compare what's happening. And, you know, obviously with my commentating about a reversal coming soon, that's there's been a over 2 month divergent period. And so it seems like these technicals are broken. Well, they're not. This is what happens at tops. It's hard to kill a bull, and it takes a lot of time. But you never know if it's going to pivot on a day or if it's going to pivot in a wedge formation, which it did last time. Last time it took 4 months. And this one is a little bit shorter so far. But we'll see. So checking this out, right here is really just a breadth indicator. We have the SPX, all the stocks within the SPX above their 50-day moving average. And when this breaks down under 0.5, which is 50% of stocks, then you should see some sort of breakdown of the market. But so far, the market continues to go higher and breadth goes lower, which is pretty typical with the big tech stocks here today. All kind of highlighting green here. Google's the only one that's not really pushing at this time. So, but what I really want to show, here's the dollar compared. Now, this is just a smaller sample, but it works like this in the past as well. As we had our 2022 correction from 2021, you saw the dollar, it was more like a safety trade. And so you see these 2 points. Here's the low, here's the high, really separated, right? Okay, so that separation, when it reverses, you can see that the dollar reversed first. Okay, made a lower high, boom. And here, we already had a lower high, but we had a lower low in the market. All right, so you catch that turn, and now the market's taking off. Now they're converging, diverging, converging, coming together. And as the dollar falls, ultimately, here's what's happening. All right, market continues higher, no turn yet. Made a new low, but now we're starting to break out. And I'll show you the actual chart of the breakout in the dollar right here, dollar sign DXY, the Dixie. All right, so we're getting our turn here and not here. So eventually these are going to converge back together. All right, so let me go ahead and pause it. Okay, so here's the dollar on the monthly time frame. You see we have this equilibrium happening here. We broke out from that equilibrium, and now we're back testing. Happened twice. You got a reaction off of there. Now you have this three-wave ABC type move. Now I know this isn't perfect. We're breaching down low here, but now we're getting this this nice green candle breaking out of this point here, and this is also a support resistance when you have this much volume on this node here. When you have that type of equilibrium, it creates a volume node. Okay, so nice bottoming tail, getting some follow through here in the monthly time frame. Let's go down to the weekly. So the weekly channel is a little bit better here. Obviously just touched it, and there's the middle of that equilibrium. A lot of trade here. We're breaking out from that. Okay, and so you will probably not see any hesitation until you get to the middle of this bracket here around 103. Let's go to the daily. Just running through these real quick. And here's the breakout. Here's the wedge that formed on the A, B, C type correction into support. A breakout, a back test of that wedge. There's your entry point. Now it's screaming to the upside. And I know that's relative. The dollar doesn't move as fast as, individual names, but this is, according to the dollar, this is screaming. So it's starting to head up. You have the breakout, you have continuation. Okay, so let's go over to SPX. And on the naked chart here, we can go ahead and close this up. This I was just comparing with the Dow Jones theory and with the HYG. It's diverging from high yield bonds as well. So tons of little signals. It's just a matter of when. Okay, so you had your tweezer top here. Had a breakdown. Now moving higher. Obviously wasn't done yet. And this right here is basically just sideways price action. You do have a couple different topping candles. Well, if price does confirm up top here by closing on the daily time frame, then it's likely that we can go a little higher. Does that match the traditional look? We're going to look at all those, so just stick around. And by the way, we're doing this intraday about 1 p.m. Eastern Standard Time. If you want to get these videos intraday, consider becoming a YouTube supporter. It's 99 cents. It comes with the Discord, and I'd like to see you there. Okay. Also, 2 p.m. the FOMC minutes are coming out. So that could be a catalyst. It could be Powell at 8:30 a.m. Eastern Standard Time tomorrow before the bell. So I do apologize. I think I gave you some wrong times yesterday. I quickly looked it up, and instead of just going to where I usually look up my information. So I do apologize for that. So tomorrow, 8:30, another catalyst before the bell. So whether anything happens today or tomorrow before the bell, we'll see. And there is consumer confidence at the end of the week as well on Friday, but that's pretty much it for catalysts. Those big catalysts either today or tomorrow morning. So we'll see what happens. Okay, so here's our trend. Everything's green. Trend is still up. 20 moving average here. This was turning red yesterday. That's no longer the case, but we still have our divergence here, a negative divergence. So just continuing to add up these divergences all over the place, and we'll see, does it take another month? Maybe. Is it imminent? I mean, of course, it's setting up. The setup's here. It's just a matter of when. Is our moving averages pushing off that 8 EMA? So that's where we took those hedges yesterday. We talked about that. It's crazy to think that we had this down move. We added on some puts here on this new high right here, and we got our little move, and we had to hedge it. That's just unbelievable. But that's the nature of the market right now. In the future, when we do get our reversal, it's going to be multiple days to the downside, not just these three little candles. You'll probably have a big engulfing candle that will cover a good week or two times frame. Okay, so we have, there's our moving averages. We can throw on our traditional look here. So there's that, the trend line from the previous all-time high that we decided to add on there. And you see prices reacting to it, reverse, 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 and we're at it again. So let's see what happens this time around. All right, other than that, we're just still kind of chopping around this wedge here. And let's throw on some indicators. Call an oscillator. And you know as well as I do, we just made this new high. It's just diverging highs. That's all I can say about this divergence over and over. With this brand new peak today, in the near term, another lower high. Also, again, there. All right, sell signal had happened already. We're on the 80. Let's see if that rolls over. DMARC. I don't believe there should be any sort of setup here. Oh, we're already, so, okay, because we came back up here with a green candle. We're still in a 8 count. So tomorrow will be a 9 count sell signal exhaustion. So you have the 9 13.9 coming up here tomorrow if this stays up. Let's go to SPY. All right, and once again, the VIX is just super important. So we'll have to take a look at that. And here's our money flow index. Still that divergent high here, that's distribution. Back at the Bollinger Band. Bollinger Bands are getting tight. That's a sell signal with overbought conditions, negative divergence at the top of the band. Now, all this sideways trade, I mean, we could just get a weekly doji candle. You know, that can happen 2 weeks in a row. Obviously, the market's waiting for some sort of excuse to turn around before it does. Same thing with Elliott Oscillator, no change there. Here's the VIX. Okay, so VIX. We talked about it breaking out. Talk about it back testing. Now it's extremely volatile, just like, you know, the spikes that happen to the upside. Are we going to get a little spike here on the back test going into the end of the day? Possibly. And then putting in the moving averages. All we're doing, we're fighting with that 8 EMA. We're holding on to that 100, but again, we could get a doji, a tail through that 100 as well, or we could gap up tomorrow over it. Either way, the market wants to handle that. But at this point in time, it's the same thing. The VIX is telling us it's bullish. The momentum's up. Trend is up. We're above the 50 moving average. And from here, obviously it starts breaking down from these moving averages. Then you had this fake break from the consolidation here, and you break down from there. The market is continuing higher. All right, so super important. Something's going to break. You know, the 8 EMA, that's a momentum. So SPX that we just looked at is holding on to the 8 EMA and bouncing off it. Now the VIX holding on to the 8 EMA. Let's see if it bounces off it. But they've both been holding that 8 EMA. That's highly abnormal. SPY. And you can look at Monday's video if you want to see where the risk is to the downside and to the upside. All right. By the way, this is where I thought the market was topping. I believe it was this. I was calling the top here. You see price actions holding above, formed a wedge, broke down, formed another wedge. And, really we could draw just another little wedge here, but that's still a back test as well. We'll see what happens for the rest of the day. For the week, this is where last week, this dashed line here, that's where we started off this week, and that's where we ended last week. We've gone nowhere. Complete range doji for the week has gone nowhere. So if that's the case, then what we'll be looking at next week is this tight range doji, and we'll look for a reversal off of that tight range, or obviously continuation, expansion, contraction into expansion type thing. Okay, but if we do move for the week, here's your options expected move. We have about 680 to the upside and about 660 to the downside. So a lot of room. The whole point is a lot of room left to touch either way. If you're bearish or bullish, there's it's probable that one of the sides will touch. Okay, so your trend continues to be higher, got back above that 20 moving average, and let's see if it stays above it and continues to go higher. You got that little sell signal here and a whipsaw back into the bullish territory. And again, a little bit more divergence. This is important to look at to see if this causes anything to happen this very near term. This one did here, from this peak to this peak, gave us a correction. Now a larger divergence, and then in the near term gave us this peak to this peak. Let's see if that gives us another sell-off. Here's our moving averages. I presume we're back above. Yep, our 8 and 20. And here's that near-term divergence right here playing out on the 65. And again with the RSI as well. All right, let's look to see when this crosses back over for another sell. This crossover gave us a sell, although a short-lived. That crossover gave us a sell. That's what it does. That's why we follow this. It's a much more sensitive indicator. Unlike the MACD, it's a little bit more smooth. And so when you have momentum heading to the downside in the MACD, and we get another crossover, that could end up being the trigger to play out to the downside. It has not done that yet. We've had huge divergence for a couple months now. And so we'll see once again if this creates the actual reversal. DMARC at a 5 count so far. Maybe we get to 9 for another setup. And here's your divergence here so far in the near term. All right, you did get divergence at this point, and that did sell off. So we'll see if there's another point of reference here for divergence that plays out. Distribution. It's your Bollinger Band, just a little bit higher there. Maybe we go up to touch the top of that Bollinger Band. That will be a setup for you overbought into the top band, and that will be another type of setup. And here's that oscillator going lower with price going higher. All right. So again, looking at the VIX, so important. Is it breaking down? Did we get an actual fake break? Possibly. We're right in the back at the center. Is that going to act as support? We'll see at 2 o'clock if we hold up here and end up back above this triangle. Otherwise, we'll be keeping a sharp eye to see if we close the gap here. That means we're probably breaking down from that point. So can't really tell what kind of structure we have going on here. This looked like some sort of leading diagonal breakdown for a higher low. We continue to make higher lows and lower highs. So really, ultimately, this could, and I'm not going to rely on this, but this could expand as a triangle and just continue sideways. It does fit the bill that we have a lower high and another lower high. So, but we're going to leave this right here for reference and see what happens from this point. All right, not a whole lot to do here now, but show what price tells us here, or I'll wait for price to tell us what's happening. All right, let me get this out to you. Have a wonderful day. Don't forget to like and subscribe, and we will see you tomorrow.